All right, so are you ready to dive into some serious market mayhem? Because
Hmm.
we are going to try to crack the code on whether this recent stock market dip is actually like a golden buying opportunity or, just like a big mess.
Yeah.
Our guide for this is none other than Lucas Downey from mapsignals.com.
Oh, yeah, I've heard of them.
Yeah, and we're looking at this analysis that he put out on March 13th, 2025.
Okay.
And he's got this thing called the Big Money Index. We'll just call it the BMI from now on.
Okay.
And it's sending some seriously interesting signals.
Interesting.
Yeah. So I think what's really captivating about his approach is that he kind of cuts through all the noise, all the headlines and stuff, and focuses on what really moves markets, which are the big institutions.
Right. The whales of Wall Street.
Yeah,
Yeah.
exactly.
Yeah.
So he's basically saying, forget the headlines, follow the money.
Which is, probably good advice in most cases.
Yeah, I think so too. Because let's be honest, we got the tariffs going on and that whole Dogecoin saga.
Oh, yeah.
And just the general economic jitters, it's enough to make anyone want to just bury their savings in the backyard.
Seriously.
I bet a lot of you listening are feeling that same knot in your stomach right now.
Absolutely.
Huh.
I think Downey reminds us, though, that these are like external forces, right? Like things we can't control.
Right,
What we can control is how we react to these things.
right,
And how we use these moments to our advantage.
right.
And he thinks that this particular moment is actually like ripe with opportunity.
Okay, so how do we turn this anxiety into action?
Oh.
Downey throws around this term forced selling, which sounds a bit ominous to me. I don't know about you, it sounds like something out of a Wall Street thriller.
It does sound a little scary, but it's actually like a pretty common market phenomenon.
Okay.
It's essentially when these like big institutions, like pension funds, hedge funds,
Yeah.
they have to sell off assets quickly and sometimes at a loss to meet certain obligations or just rebalance their portfolios.
Hmm. So it's kind of like a chain reaction. Like one big player sells and then others get spooked and they follow suit and suddenly everybody's heading for the exits.
Exactly. And Downey points to a pretty dramatic example of this on March 11th, 2025.
Oh, wow.
We saw a whopping 464 equity outflows.
Wow.
That's the highest number of big institutions selling off their stock in a single day since June 2022.
464, that's a serious exodus.
It is.
But here's the question. Does this exodus signal a market crash, or could it be a buying opportunity in disguise?
That's the million-dollar question, right?
Yeah.
And Downey suggests that this kind of widespread selling often leads to what's called capitulation.
Capitulation.
You can think of it like a poker player. They just throw their cards on the table in frustration. They essentially give up.
Ah, so it's like everybody's so panicked that they're selling at any price,
Right.
which could actually create a market bottom?
Yeah.
Is that what Downey's getting at?
Precisely. And to back this up, he dives into some pretty fascinating historical data. He looked at how the S&P 500 performed after similar massive sell-offs, ones with 464 or more equity outflows, just like we're seeing now.
Okay.
And the results might surprise you.
Hit me with those numbers.
Okay, so Downey's analysis shows that, on average, after these big sell-offs, the market tends to bounce back pretty impressively.
Okay.
We're talking about an average gain of 6.7% within 3 months.
Not too shabby for a market supposedly in free fall.
Not at all, and it gets even better. Within 6 months, that average gain jumps to 9.6%.
Okay. I'm liking where this is going.
Hold on, there's more. Within a year, the average gain after these massive sell-offs is a whopping 21%.
Get out.
And after 2 years, it's a mind-blowing 36.1%.
All right, now we're talking. So while past performance obviously doesn't guarantee future results, this historical data really suggests that these massive sell-offs, while they're scary in the short term, they actually might create a predictable pattern of recovery and growth.
Yeah.
It's like a spring being compressed. The more it's pushed down, the more powerful the rebound.
That's a great way to put it.
So the question remains, how do we know when that spring is about to release?
Right.
When it's the right time to jump in and buy?
Yeah, that's where Downey's Big Money Index comes into play.
Okay, so tell me, what is this Big Money Index and how does it help us navigate this potential buying opportunity?
So think of the BMI like a thermometer for the market.
Okay.
It tracks the buying and selling activity of those big institutions we were talking about earlier.
Right.
A high BMI reading suggests widespread buying, while a low reading signals widespread selling.
So we're taking the market's temperature.
Exactly.
Okay, so what's the market's temperature saying right now?
Well, right now the BMI is flashing a warning sign. It's hovering just below 40%, which is one of the weakest readings we've seen in 2025.
Oh.
But here's the twist. Downey believes that this extremely low reading could actually be a signal that the market is about to hit what's called an oversold state.
Oversold, so like things have been sold off so much that they're likely undervalued.
Right.
It's like a clearance sale on Wall Street.
That's the idea. And historically, these oversold periods, as indicated by a plunging BMI, have often been followed by some pretty impressive market rallies.
So it's like that moment at the bottom of a roller coaster when you know the only way to go is up.
Exactly.
Yeah.
And Downey even provides like a handy visual to illustrate this point.
Oh, okay.
He includes a chart in his analysis that shows the past 10 oversold BMI occurrences since 2009.
Okay.
And what it reveals is a clear pattern of sharp drops leading into the oversold zone, followed by steep upward trends. Those golden buying opportunities.
Okay. I'm starting to see the light here.
Good.
But before we get too excited and start throwing money at the market, I have to ask, are there any risks involved?
Sure.
What if this time really is different?
Well, that's a fair point. And Downey does acknowledge that even with this historical pattern, there's always a chance things could play out differently this time. Remember, investing always comes with inherent risks.
Right. So we need to tread carefully and understand there's no such thing as a guaranteed return.
Exactly. And Downey's analysis isn't about just like blindly buying everything that's dropped in price.
Right.
He actually suggests that things might get a little bumpy in the short term before that big rally kicks in.
Oh, so maybe we shouldn't expect to get rich quick with this strategy.
Not necessarily. Downey points out that in the weeks leading up to an oversold BMI reading, markets might continue to decline.
Okay.
And there's often increased correlation across different types of stocks.
Oh, okay.
This means that like large, mid, and small cap stocks, basically companies of different sizes, they tend to move in the same direction, usually downwards during this period.
So even though the long-term outlook might be bright, there's a chance for some turbulence along the way.
Right.
It's like a plane hitting some air pockets before reaching cruising altitude.
That's a great analogy.
So while we might see some short-term pain, Downey believes the long-term potential gains are worth considering.
I think so.
All right, I'm definitely intrigued. So if we're looking to potentially capitalize on this buy the dip opportunity, what's our next step? How do we actually put this knowledge into action?
Well, remember Downey's key message. Follow the money flows.
Right.
He's urging investors to pay attention to what those big institutional investors are doing, rather than getting caught up in the daily headlines and reacting emotionally to every market fluctuation.
So instead of trying to time the market perfectly, which is notoriously difficult,
Right.
we should be looking for clues in the behavior of those institutional giants.
Yeah,
It's like trying to predict the weather by watching which way the birds are flying.
exactly. And to help investors navigate this complex landscape, Downey suggests considering tools like MapSignals Pro, which he happens to offer.
Oh, okay.
These tools can help identify those outlier stocks that are being favored by institutions, particularly during these potential buying windows.
So it's like having a secret weapon to help us sift through the noise and focus on the most promising opportunities.
Yeah,
I like it, but before we start picking stocks, let's take a breath and recap what we've learned so far.
okay.
This has been a lot to take in.
Good idea. It's easy to get swept up in the excitement, but it's important to make informed decisions.
Right, so we started by acknowledging those very real anxieties that many investors are facing right now. The tariffs, the DOGE coin hangover, the economic uncertainty.
Yeah, that's a lot.
It is a lot, but instead of letting those emotions paralyze us, Downey's analysis encourages us to look beyond the headlines and focus on the data.
That's key.
Yeah. We then explored this concept of forced selling, where those big institutions are offloading assets which can push prices down and create a ripple effect throughout the market.
Right.
And while this can be unsettling in the short term, it also creates potential buying opportunities for those who are ready to seize them.
Exactly.
And that's where Downey's Big Money Index comes in this tool, which tracks the behavior of those big institutional investors, is currently flashing a signal that suggests the market might be heading towards an oversold state. And as Downey's historical analysis shows, these oversold periods have often been followed by some pretty impressive market rallies. It's like the market is a giant slingshot being pulled back, ready to launch forward.
I like that analogy.
But before we get ahead of ourselves, it's important to remember that there might be some short-term volatility before that big rally kicks in.
Of course.
So patience and strategic decision-making are key.
Right?
We need to be prepared for some bumps in the road and focus on those outlier stocks that are being favored by institutions, as Downey advises.
Good advice.
Okay, this has been a whirlwind of information.
Yeah.
We've gone from feeling the anxieties of the market to understanding how to potentially turn them into opportunities.
That's the goal.
It is the goal. But before we wrap up part one of this deep dive, I have one final question for you.
Okay, I'm all ears.
Given everything we've discussed today, the historical data, the current market signals, and Downey's insights, what steps will you be taking to potentially capitalize on this buy the dip opportunity?
That is the question.
It is the question.
That's the question each of us has to kind of answer, based on our own individual financial goals and risk tolerance.
Right.
But I think what's interesting about Downey's approach is that it's not just about, picking the right stocks.
Right.
It's about like building a mindset, like a framework for understanding how markets really work.
So it's not just about trying to get rich quick. It's about taking a more holistic view.
Exactly.
Thinking long term and not letting those short-term market swings throw us off course.
Exactly. Downey's encouraging us to think like those institutional investors.
Right.
To focus on the fundamentals.
Yeah, right.
And not get swept away by the hype or the panic of the moment.
It's like we're learning to read the language of the market, to decipher the signals that most people just completely miss.
Yeah.
I feel like I'm getting a glimpse behind the curtain of Wall Street.
And with that knowledge comes a sense of empowerment.
Right.
We're not just reacting to events, we're understanding the forces that drive those events.
Right.
And that allows us to make more informed decisions.
Okay, I'm feeling more confident already, but I have to admit there's still a part of me that's a little hesitant. What if this time really is different?
Sure.
What if all this historical data and analysis doesn't apply to the current market conditions?
Well, that's a valid concern, and it's wise to approach any investment strategy with a healthy dose of skepticism.
Yeah.
It's important to remember that investing always carries some level of risk.
Right.
No one can predict the future with absolute certainty.
So how do we balance this potential opportunity with the inherent risks involved? I mean, I don't want to bet the farm on a strategy that might backfire.
Of course, and Downey wouldn't advise that either. Remember, he's all about making informed and strategic decisions. That's where the importance of diversification comes in.
Right. Don't put all your eggs in one basket. We've all heard that before.
Exactly.
Okay.
Spreading your investments across different asset classes, stocks, bonds, real estate,
Okay.
different sectors,
Yeah.
technology, healthcare, energy, and even different geographic regions.
Okay.
That can help mitigate risk and protect you from those unexpected market shocks.
So it's like building a financial fortress with multiple layers of defense so that if one area takes a hit, the whole structure doesn't crumble.
That's a great way to think about it. And diversification isn't just about reducing risk, it's also about maximizing your potential for returns.
Okay.
By spreading your investments, you're essentially casting a wider net, increasing your chances of catching some winning fish.
I love that analogy. So while this buy the dip strategy based on Downey's analysis sounds promising, we need to approach it with a balanced and diversified approach.
Absolutely. And it's important to align your investment strategy with your own personal risk tolerance and financial goals.
Right.
What might be a suitable investment for one person might be completely inappropriate for another.
That makes sense. So there's no one-size-fits-all approach.
Right.
We each need to do our own homework, assess our individual circumstances, and make decisions that feel right for us.
Exactly. And that brings us back to the core of what we've been discussing today, the power of knowledge and the importance of understanding market signals.
Yeah.
By taking the time to learn to analyze and to think critically about the forces that shape the financial landscape,
Right.
we empower ourselves to make more informed decisions.
So it's not just about following someone else's recommendations blindly.
Right.
It's about developing our own financial literacy and becoming more confident investors.
Precisely. It's about taking control of your financial future and making decisions based on knowledge and insight, not fear or speculation. And that's a powerful feeling.
Listening to all this has really shifted my perspective. I used to think of investing as this mysterious and intimidating world, reserved for Wall Street experts and financial gurus.
Yeah.
But now I'm starting to see it as something that anyone can learn and participate in, regardless of their background or experience.
And that's the beauty of it. Investing isn't just about making money. It's about building a future, creating opportunities, and achieving your financial dreams.
So whether you're a seasoned investor or just starting out, the key takeaway is to stay curious, stay informed, and stay engaged.
Yeah.
The market is a complex and ever-changing beast. But by arming ourselves with the right knowledge and tools, we can learn to ride the waves.
This deep dive is just the beginning of your exploration. Downey's analysis provides a fascinating starting point, but it's up to each of us to continue learning to conduct our own research and to make decisions that align with our individual circumstances and goals.
So fellow knowledge seekers, go forth and explore.
That's right.
Dive deeper into the world of market signals. Discover those hidden gems that the institutional investors are favoring. And remember, the power to shape your financial future lies within you.
What's truly exciting is that we're not just talking about maximizing returns. We're talking about building a foundation of financial literacy and empowerment by understanding the forces that drive market movements. We become more informed citizens, more confident investors, and more active participants in shaping our own economic destinies.
So, to all you listeners out there, let this deep dive be a catalyst for your own financial journey. Embrace the challenge, seek out the knowledge, and never stop exploring the world. Investing is full of opportunities, and with the right mindset and the right tools, you can navigate it with confidence and potentially achieve your financial dreams. It's amazing how much we've unpacked in this deep dive.
Yeah.
We started with a feeling that not in our stomachs that many of us get when the market throws a tantrum.
Right.
But then we moved beyond those emotions and started looking at the situation through a different lens, the lens of data and history and those huge institutional investors.
Like we were given a backstage pass to the world of high finance,
I know, right?
learning the secrets that drive market
Yeah,
movements.
yeah.
And what's so empowering is that you realize that these secrets aren't actually that secret.
Right.
The information is out there.
Yeah.
It's
yeah.
just a matter of knowing where to look and how to interpret it.
And Downey's analysis has given us some pretty valuable clues, like this idea that massive sell-offs can actually create these predictable buying opportunities, and that the BMI can signal when the market is about to hit an oversold state.
Right.
It's like having a cheat sheet for navigating this crazy financial roller coaster.
But as we've discussed, it's not about blindly following any one strategy or indicator.
Right.
It's about understanding the principles at play, doing your own research, and making decisions that align with your own personal circumstances and goals.
Right. We've talked about diversification, risk tolerance, and the importance of staying informed.
Absolutely.
It's like we're building a toolkit for navigating the financial world.
Yeah.
A toolkit that will serve us well no matter what the market throws our way.
And the best part is this toolkit isn't just about making money.
Right.
It's about building confidence, taking control of your financial future and achieving your dreams.
So as we wrap up this deep dive, we want to leave you with this final thought. Given everything we've explored today, the historical patterns, the current market signals, and Downey's insights, what actions will you take? Will you ride the waves of uncertainty with confidence, armed with the knowledge and insights we've discussed? Or will you let fear and indecision hold you back from seizing the potential that lies ahead?
The choice is yours. But remember, the most valuable investments you can make are often in yourself, in your education, and in your ability to think critically and make informed decisions.
So go forth, explore, and discover. The world of finance is full of possibilities. And with the right mindset and the right tools, you can chart your own course to financial success.
Until next time, stay curious, stay informed, and keep diving deep.